Hello and welcome to another SWAT UK video, and we're trying to keep the YouTube channel fresh with things that are happening in the profession. One of the things we've been talking about as we've been dancing around the country doing lectures is the change in the size criteria and the new disclosure framework for small companies. Now, small companies, they get sucked into FRS 102 for periods commencing 1st of January 2016. But they also get new size criteria. Have a look at this image. This gives you an idea of how the size is moving. So significantly larger sizes in terms of turnover and gross assets will apply to small companies for that period. Remember, it's gross assets, not net assets. And also notice that the employee limit has not changed. We're still looking at 50. Do be careful how you calculate employees. It's not full-time equivalents. It's how many people worked for you each month, add together each month and then divide by 12. So if someone works for you for 1 day in that month, that's a 1, even though they would have been a very small full-time equivalent. So you've got the size criteria. That's going to apply for periods commencing 1st of January 16 initially, although you can early adopt that size criteria for reporting only. Let's park audit for a minute. For reporting only, you can adopt the new framework and that new size criteria. So it's possible to adopt that new size criteria, become small for periods commencing 1st of January 15, and then you can go to FRS 102 for small companies rather than having to do a year of 102 proper and then go down to being a small client. The biggest benefit's going to be for groups, of course, where if they can be small, then they don't have to prepare consolidated accounts. So changes there. What about audit? I hear you say we cannot early adopt the audit changes if indeed there are any changes. It's being discussed at the moment. The current proposal seems to be that actually let's do nothing and the audit exemption criteria will move with size. But that will only apply for periods commencing 1st of January 16, and so a slight delay in doing that. So you're now clear what is a small company. You then need to be thinking about what's in this reduced disclosure framework. Well, the standard indicates that there are 13 notes that you need to include in your accounts, and we've shown these on the next two images. So, specific notes that need to be included, but the list is not that long, and so only 13 to worry about, and potentially for a lot of your clients all 13 will not be relevant. So it should be reduced disclosure for some companies. Within that, and you'd need to look at our course material to get more detail, some of the notes also have exemptions from what we're currently used to. One of the notes you might have seen is reduced disclosure for related parties, and you might think, well, what regulations are we applying? Well, very reduced in the sense that for most cases, for most standalone companies, it will just be disclosing transactions with directors if they are material and outside the normal course of business. So it is going to be a simplification from the rules we have at the moment in FRS 8 and moving into FRS 102. The slight wrinkle in all of this small company reporting is that you need to apply judgment. Unlike micro entities where you follow the rules, you give a true and fair view, for a small company you're going to need to make sure that even given you followed the 13 disclosure notes, have you still given a true and fair view? Could there be anything else you need to add? The hope is that the FRC might put something in FRS 102 to discuss this, and no doubt the faculties of the Institute will be keen to discuss this on future courses. But it is worth bearing in mind judgment will still be needed. Anything else of particular interest for the new small company regime? Well, abbreviated accounts are a very popular way of reducing the amount of information on the public record, but unfortunately this regime abolishes abbreviated accounts. What we're left with then are abridged accounts. These are exactly the same notes to the accounts, but a slightly simplified profit and loss and balance sheet. If you take this approach, you need all shareholders to approve annually after the financial year has passed, and if you can't get that, then you can't take advantage of it. The beauty of abridged accounts is that once you've prepared them and the shareholders have approved those accounts, you don't need to file the profit and loss or the director's report. So okay, there are more notes to the accounts, but you don't have to disclose your profit and loss account. That might need a little bit of warning your clients if they're particularly fond of abbreviated accounts at the moment. Okay, I think they're the main things about the new small company regime, and yes, we have a little bit of time. This is primarily periods commencing 1st of January 16 unless you early adopt, but we do need to be talking to clients now, thinking about what this means, and of course getting ready for getting these small companies into the accounting of 102, even if the disclosure is somewhat reduced. Thank you very much. Keep watching our YouTube channel and we'll give you some more information as the rules become clearer. Thank you.